This extraordinary turnaround we've seen in the market in the last hour and a quarter or so. Do you expect the positivity we've seen in that last hour to carry through for these last two trading sessions?
Yeah, I mean, I think it's a tough call over the next two trading sessions, but I think, when we put that tweet out yesterday morning, our view was, look, the market's down 19% quarter to date in Q4. It's the worst start to a fourth quarter since the Great Depression and through 1987 and when Lehman failed. So there have been only 7 worse times in history. And, things are really bad right now, but I think we can all agree this is not Great Depression bad or when you had banks failing like when Lehman went under. And so it seemed, pretty excessive, which is why we put that tweet out that, look, we expect a rally. Obviously, yesterday up 5% was more than we could have expected in a single day. But I think what you should see is that as we get towards year end, we get through tax loss selling, et cetera, that, you probably will see a little bit of a pickup continuing as we get into next year. But then I think things get a lot tougher because, there are some real problems out there. It's just we got really oversold and the good stocks went down with the bad. And now everything's coming up and, this is when you have to start getting selective again.
So, Dan, I usually think of you and I think of technology. Where does tech fit into that overall market call of the good and the bad and whether you should be buying right now?
Yes, Sarah. That's a good question because we've got some really positive areas of tech. So, we heard, I think, yesterday that we've got really good holiday sales. In fact, retail sales, were the best in 6 years, and online sales were up about 19% from a year ago, according to the data that MasterCard had out. And so that should be good for the e-commerce players and also for the search and social media platforms out there. Also, video game sales seem to be pretty strong. And game approvals are starting up again in China for the first time since March, which is, 9 months. And China is the biggest end market for video games. So I think those sectors are ones that we think are good. Having said that, there's a bunch of negatives as well. I think smartphone sales in particular still don't seem very good. I seem to get a new email every day for a trade-in offer on my smartphone. Auto demand in China in particular seems to be weak. That looks like it's down about 20% year over year in the month of December. In fact, China auto sales this year will be the first down year since 1990. China auto sales weren't even down during the Great Depression. So during the Great Recession. So if you're not selling into that market, if you're selling into that market like with semiconductor chips, probably Q1 for semiconductors is going to be pretty bad because you're going to have to clear all the inventory of unsold smartphones, unsold autos, and in addition, I think you've had customers order in advance because they were worried about tariffs going up to 25% on January 1st. So you'll have a lot of excess inventory to clear. So I think stock picking is going to become very important as we get into the new year because as we're seeing, if you screw up, you're getting punished pretty badly.
Dan, I know you can't talk specific stocks, but when you joined us a couple of weeks ago, I think it was on the 7th of December, you made it clear that you much preferred social media stocks. Clearly, with your tweet 2 days ago, you were warming up to market in general. Have you deployed that cash into social media stocks specifically?
Yeah, in fact, that's a really good question. That's the space where if we're looking at sort of the internet sector in general, now you've got stocks that are trading below the market multiple. And, obviously there's threat of regulation, there's been data privacy breaches and all this stuff. But at the end of the day, you've got platforms in search that are, dominant. Nobody's going to replace them. And you've got platforms in social media that are incredibly dominant that probably nobody's going to displace. And those are still areas where consumers are spending more and more of their time relative to watching traditional TV. And so that's where ad dollars, I think, are going to continue to flow. So from a risk-reward basis, those are some of our most favorite areas to actually be deploying capital, as well as sort of the video game sector as well.
10 seconds, Dan. Are you still shorting Apple? Because it was a pretty good call when you came on here and said you were a few weeks ago.
Well, without getting into the specifics of Apple, what I would say is that the smartphone sector has been beaten down a lot. My view is at this point, I'm looking for stocks to bounce more, and if they do, my plan is to reshort that space the semiconductors and the companies that sell smartphones underneath it, because I think you're in this period of time where, smartphone units are going to be down for the first time since the industry began. And I think you're going to see profits starting to compress because you just can't keep raising prices and hope to gain market share in areas like India or China where people can't afford to spend $1,000 on a smartphone. So I think this space is going to go through what the PC industry went through. You go all the way back to 2011. The PC industry units, they shrank for 6 years in a row, 2012 all the way through 2017. I think in the smartphone space, you're selling 1.5 billion smartphones every year. Over 4 billion people on the planet have one, and I think what you're going to see is that unit sales are going to be depressed for the next several years.